Hello and welcome to another TLDR US video. In recent months and years, cryptocurrency has become a more and more ubiquitous topic, with seemingly everyone in the world investing in or complaining about crypto. You might have noticed recently that there's been a bit of a crash in the crypto market, one that many are attributing to either Elon Musk or China. So in this video, we're going to be taking a look at what happened in the recent cryptocurrency crash and do our best to explain why it happened. Before we start, if you want to support the channel, consider subscribing or backing us on Patreon. In return for your Patreon support, you can get a whole bunch of perks, from early access to videos and the ability to vote on video topics, to exclusive TLDR live streams, behind the scenes posts, and your name in videos. Find out more about what you can get by clicking the link in the description. Let's start with the basics of the crash. For about 2 weeks, cryptocurrencies have been falling pretty dramatically. From Monday 10th to Tuesday 18th, Bitcoin fell by 25%, Ethereum by 15%, and Dogecoin by 13%. Now, veteran crypto traders will tell you that these swings are all part of the business and nothing to worry about. But things got really serious on Wednesday. On Wednesday at about 1 PM UTC, Bitcoin fell to a low of $32,000, Ethereum $2,000, and Dogecoin 22 cents. On average, that's a fall of about 50% from Monday 10th. To anyone with their life savings in crypto, that can't have been fun, and we're sorry for your pain. But enough about you. What caused this crash? Well, there are basically two reasons. The first is Elon Musk, and the second is the People's Bank of China. Let's start with Musk. Musk has an outsized influence over the price of cryptocurrencies, especially Bitcoin and Dogecoin. To give you a sense of this, look at this graph which charts the price of Bitcoin against the US dollar since the start of the year. The first spike in early February was triggered by Tesla announcing in an SEC report that it had bought $1.5 billion worth of Bitcoin and was planning to accept it as payment. The fall in February came straight after Musk tweeted that Bitcoin and Ethereum seemed high, lol. The spike in March came after Musk announced that you could buy a Tesla with Bitcoin, and the sudden collapse from May 12th was triggered after Musk reneged on that promise, citing environmental concerns about Bitcoin's energy costs. Musk then accelerated this decline with another series of tweets, including one suggesting that Tesla had sold its Bitcoin holdings. Musk then clarified that Tesla hadn't actually sold their Bitcoin, but by that point the damage had been done. Musk has a similar relationship with Dogecoin, a cryptocurrency based on the Doge meme. The rally in February came after tweets from Musk promoting the currency that took Doge from a cent to 5 cents, a 500% increase. The second spike in mid-April was triggered by this tweet from Musk, and the third spike came after he announced that the self-proclaimed Doge father would be appearing on Saturday Night Live on May 8th. That rally sustained until Musk actually appeared on SNL, when he described Dogecoin as a hustle, triggering a massive drop.
Well, it's the future of currency. It's an unstoppable financial vehicle that's going to take over the world.
I get that, but what is it, man?
I keep telling you, it's a cryptocurrency you can trade for conventional money.
Oh, so it's a hustle.
Yeah, it's a hustle.
Why didn't you say that, man? Doge father, everybody. It's a hustle.
To the moon!
Dogecoin then recovered a bit after Musk floated accepting Doge at Tesla and tweeted that he was working with Dogecoin devs. But then it followed other cryptos in that spectacular crash on Wednesday. The point we're trying to make is that cryptos, especially Bitcoin and Dogecoin, rise and fall on Musk's tweets. So when he went sour on Bitcoin, the market crashed, in the same way that it rallied when he was keen on it. This isn't entirely irrational or speculative, because whether you can buy a Tesla, or anything for that matter with Bitcoin, will affect its intrinsic value. But the swings seem to have been made more extreme by the fact that Bitcoin's fundamentals are, to put it lightly, a bit murky. From a neutral perspective though, it's a shame that Tesla didn't stick with Bitcoin. One of the most common criticisms of cryptocurrencies is that they're too volatile to act as a unit of exchange. It would have been interesting to see if somehow tying Bitcoins to an actual product would have affected their volatility in the long term. On the other hand, maybe the fact that Tesla had to give up on it is proof that cryptocurrencies, or at least Bitcoin, are just too volatile to act as official units of exchange. Anyway, that's the first reason for this crash. Elon Musk tweeted about it. On to the second reason, the People's Bank of China. Just before Wednesday's crash, the bank released a statement saying that virtual currency is not a real currency, and should not and cannot be used as currency in the market. In the statement, the People's Bank warned financial institutions about accepting cryptocurrencies or offering crypto-related products. This sounded like a precursor to official Chinese anti-cryptocurrency regulations, which unsurprisingly spooked the market. This wasn't a massive surprise though. China has made clear since 2017 that it doesn't like cryptocurrencies, and is currently developing its own cryptocurrency to squeeze them out. But the timing on this was pretty unfortunate. The long and short of it is that the People's Bank of China is apparently concerned about cryptocurrencies undermining their monetary sovereignty. Digital payment apps like Alipay are ubiquitous in China, and if people started using Bitcoin for everyday digital transactions instead of yuan, this would limit the People's Bank's ability to affect monetary policy. Because if everyone was trading in Bitcoin, who cares whether interest rates on the yuan have changed? It's worth noting that this isn't a uniquely Chinese worry. Western countries were pretty quick to regulate Libra, Facebook's proposed digital currency, now called Diem. Presumably, it's just that Western countries don't think cryptos like Bitcoin are as likely as Diem to undermine their monetary sovereignty, or at least they're not as worried as China is. Anyway, that's what caused the dramatic crash. On Wednesday afternoon and Thursday, cryptocurrencies recovered dramatically as investors bought the dip, but stayed well below their pre-crash levels. As of Thursday, Bitcoin was trading at about $40,000, Ethereum at $2,500, and Dogecoin at about 35 cents. As a last note, if you're trading crypto, or well, anything really, make sure to keep your mental health up. Trading, especially with this sort of volatility, can be extremely stressful and all-consuming, so just make sure that it's not taking too grave a toll on your mental health. If you want to learn more about the future of crypto, we just posted a video on our TLDR Global channel this morning about the prospects of countries launching their own digital currencies, because a lot of countries are actually working on developing them, or at least considering them right now. So if you want to find out more, there's a link to that video in the description. And while you're there, be sure to subscribe to the TLDR Global channel for more updates. Also, make sure you subscribe to this channel and ring the bell icon to be updated on more US news as it plays out. Also, if you want to see your name at the end of videos, you too can back us on Patreon. The link to that is in the description.